A market analysis is an assessment which allows you to identify how attractive is a market. It also detects current and future risks of operating in a particular location. In this video, you will learn about the elements of a market analysis, the different types of analysis that might interest you, and how to choose from them. Then we will take a look at the case of the iPhone killer, one of the most infamous recent market introductions. In the end of this video, we'll show you a market analysis template that should help you avoid the problems from the case. Let's start discussing the elephant in the room. For some people, a market analysis is associated with benchmarking products. This is comparing prices, functionality, the design, and image of your product with everything that can be consumed interchangeably with it. For others, it means comparing the competition, the range of existing product manufacturers, their size, networks, profits, consumer share, and sales. Market analysis is also often associated with the search of prospective trends and opportunities that come with them. In many cases, a market analysis would mean figuring out who are the current and potential consumers for the company. Sometimes it's all about formulating the competitive strengths and weaknesses of the company in the market, the available opportunities and threats. Other times, it's about determining the impact of various political, economic, social, technological, legal, and environmental factors on the business. There are those for which market analysis is a synonym to a market research and implies empirical research like conducting surveys, interviews, focus groups, and the such. This is a typical case of a group of blind men trying to describe an elephant. Everyone would describe it differently depending on the part which a particular blind man is currently touching. So, based on what he or she is looking for and their particular area of expertise, the marketeer, the manager, the CEO, the entrepreneur, the analytic, the consultant, and the business student are likely to interpret a market analysis as something quite different. And this would be okay, this would be absolutely fine, if not one little problem. I'm very sorry, I truly am, but market analysis is sequential. If you are not yet scared, let me help you get there. Sequential means that each next step has to be performed after the previous one. For example, you must first estimate a market before making a competition analysis. Also, before doing benchmarking, you have to first engage in segmentation. If you do it any other way around, it is likely that you will have numerous mistakes, factual, conceptual, or logical, and you really don't want to have those. A complete market analysis would consist of over 20 parts. All of these elements can be grouped into three broad categories. First, general market estimation concerns mainly with determining the market size and potential sources of its growth or decline. A lot will be determined by how precisely you define your market. This analysis really helps you to understand who is your potential consumer. Get it wrong, and you are on a slippery slide to analyze a market distinct from yours. Second, consumer analysis is about getting a clear picture of your clients. Just like beauty, value is in the eye of the beholder. The most innovative product may fail in the market if the producer wasn't able to understand how to make the consumer truly see its value. Third, industry analysis is basically competitors analysis, extended by a deep investigation of the macro trends and peculiarities of the industry as a whole. Without a prior consumer analysis, it is likely that in analyzing the competition you will lose important substitute products, analyze products which are not really in the same league as yours, and also formulate the comparison criteria in a way which is different from those the consumers are actually using when choosing between products. Although the sequence of market analysis elements should be more or less the same, there might be a drastically different emphasis on the different parts. And this emphasis will depend directly upon the aim of the analysis, based on whether you are a startup, a company looking to expand, or re-evaluating your current position. You would have different requirements for a market analysis. Let's say that you are Jack, an entrepreneur, and you have an idea of a new product. You would want to check whether there is a place in the market for that idea and estimate the likelihood of its success. Unfortunately, many young entrepreneurs tend to skip the first two parts of the market analysis and jump straight to the industry analysis. Afterwards, supplementing it casually with a haphazardly made consumer survey results, and calling it a day. Well, they should have focused on the market estimation and figured out what their market really is. Consumer analysis would be expected if the product is innovative and is never seen before. The entrepreneur must prove that his invention actually creates new value. However, most straightforward consumer surveys will fail to show real insights as the startup does not have a known brand name to be adequately compared with competition. And receiving evaluation of a product idea is not the same as comparing real products. In fact, the industry analysis in this case could be considered as secondary. If you manage to precisely define your audience and come up with a product that tremendously increases consumer value and has the potential to bring high profits, you can use this market analysis to sell your idea to an existing market player or to attract an investor, both of whom are likely to know about the competition in the market way more than you do. It's important to note that a market analysis rarely includes the estimation of a venture's profitability. And the reason for that is simple. To do sales estimations, you also need to determine how much the proposed startup will cost to implement. You need to have a projection of the amount of funding or startup capital needed, what sources of capital can and will be used, and what kind of return can be expected on the investment. You need to know the requirements for specialized equipment or facilities, copyrights, patents, labor, and expertise for the venture in question. Such analysis is often called a feasibility analysis. Market analysis is an integral part of such a research. When it is supplemented with such elements as sales and promotion cost estimation, it is also known as market feasibility analysis. This is Linda. She is a marketing manager in a middle-sized company. For her, analyzing a market is almost an everyday process of gathering information relevant to the business. Its purpose is to be used in accurate and confident decision-making about determining market opportunities, market penetration strategies, and market development metrics. Linda is particularly interested in everything that can tell her in more detail about the current position of the company in the market. She monitors the competition in the market by identifying competitors, getting information on how they operate, and learning how customers compare the company products with the competitors. This type of market analysis is often called market intelligence, and it has a rather comparative nature. In many occasions, it's operational, not strategic, and hence major trends and macro statistics identified by a market estimation are of little interest to Linda. A mature business tends to already know the market it is operating on and possess extensive knowledge about the consumers. And finally, here's Robert. He works at a consulting agency. If Linda's market analysis was subjective by definition, as she evaluated the environment to figure out how it may affect her company, and so was Jack's analysis. He looked for evidence of potential success of his new product. In Robert's case, his goal is to be as objective as possible. His task might be to create a rating of successful companies in the industry, to evaluate the potential for a merger or acquisition, or for example, to find the reason behind the problem of a client company. Although he needs to perform market analysis for this purpose, it is only a part of a marketing audit. He has to also evaluate the ability of the company to successfully exploit the current and future potential of that market. For example, he would have needed to check the history of growth and new product launches for Linda's company, as well as the effectiveness of its organizational structure and management, and would have had to evaluate whether Jack's expertise is enough to drive his promising idea to a profitable place as an acting CEO. Depending on the task put in front of him, apart from the management audit, Robert would also have to conduct a legal production information system or a compatibility audit. Such a work is often referred to as due diligence. The level of complexity used in your market analysis is up to you to decide. You can undertake simple activities that can be accomplished on your own, such as creating a short customer satisfaction questionnaire or studying demographic data for your area, or undertake complex ones that require assistance from a professional market research firm. A regular flow of market information would help you to maximize the potential of your business activities and help you to create a roadmap for future growth.